welcome everybody. This is learning session 24 here at Kingdom Wealth Creators, and this is September 12th, 2020. And something for you to know, this is me back home in Trivandrum after 7 long months in Kochi. We had gone for a small vacation to be with my in-laws, and then the lockdown happened and we were stuck there. And so it's good to be back home in Trivandrum, and it's the best news in the last 2 weeks we have had. The market has not done so well in the last 2 weeks. Many of you probably have felt the pain. I also had some terrible times. I'm just telling you the truth. Sometimes, some days the market wasn't all that great. Most days the market wasn't great. There weren't many good days in the market for the last 2 weeks. And still, I've realized that there are ways you can get around it. Okay, so let me just quickly talk to you about what my situation is right now. Now, if you look at this, okay, we've been in 11 trading days. I have done 16 trades, out of which right now only 8 are successful. Now, remember, most of these are hedged. Okay, and you will notice, other than, in fact, in this entire list, you can see that I have about 16 shares mentioned there. 8 of them are currently in a loss or closed in a loss. The ones bolded are in a loss, including Adani Port, which I didn't hedge, by the way. So Adani Port I didn't hedge, and it was in a loss. So overall, 8 of them in losses right now. And so the market has gone down about 3%. I'm sitting at 0.94%, and now you might ask, how is that possible? Okay, 3% and 0.1%. How is that possible? And it's simply because of hedging. And I took my hedging to another level this time. Normally, I think in July I've hedged maybe one hedge per trade. In August I went to sometimes 2 hedges per trade. But in September, I have some trades which I have taken even 4 hedges. That's how bad the market was. And so I took 4 hedges on one single lot of future trade. For example, Bajaj Finserv, I have 4 hedges. Bharti Airtel, I had 4 hedges. Sun Pharma, I had 4 hedges in between. I think a lot, and almost everything has 3 hedges at least. Okay. And so it's that sort of a market. But look at this, okay. If the current prices in all of these shares, okay, wherever they're right now, if they hold for this month on September 24th, when the futures and options contracts expire for September, is September 24th, which is just 9 trading days away. This is how it's going to look at. Okay, so look at the difference. Okay, right now it looks like the position, I'm sitting at 1% loss. If none of the prices move, they stay where they are for this month, I'm going to see 13 out of 16 successful trades, okay, from 8 to 13, and a return of almost 6%, or 2 lakhs return, 6%, if simply because of hedging. So I have realized hedging is really powerful. I can probably go into some of these trades if you want later on during the session. If you have questions on it, or how is that possible, explain it, please. If you have such questions, you can put it in the chat box and I will answer them. But basically you can see the difference. Okay, even though the market is down 3%, currently my position looks, it's down 1%. Again, 3% versus 1% is a huge difference. Okay, and the return on this position at the end of the month is probably going to be 6% if the current prices hold. Okay, and that's just the power of hedging. All right, so this is the example. Nifty reached 11,784 as a high on August 31st. Yesterday closed at 11,464. Okay, and so that's a difference of almost 320 points, and that's about 2.8%. But my hedging, my current loss is only 0.9%. But at the end of the month, on September 24th, it would be not a loss but a profit of almost 6.1%. And that's how hedging works. Okay? This is why I do a lot of hedging. And I actually, to tell you the truth, there were days when I saw a mark-to-market loss of 1 lakh, 1.2 lakhs, 1.3 lakhs. There were days when I didn't see any profit or loss. days when the market went down and I still saw uh, about 2,000 rupees profit. Days when the market went up and because I had hedges, I saw maybe 2,000, 3,000 rupees profit. There were days when I saw 40,000 profit, 1 lakh profits. But again, all of these are mark to market. Okay, so at the end of the day, uh, because of those hedges, I realized that I can breathe a lot more easier. And also, I've been active hedging. I think one day when the market fell, I wasn't even available. I was driving and we were moving down from Kochi to Trivandrum, so I couldn't do any trades. And the market fell that quite badly that day, not because I was not available, because the market decided the US market fell that day. But anyway, uh, the hedging really saved me. I'm telling you the truth. Okay, the way the hedges have worked really helped ensure my position is protected. And so hedging is really powerful. The market outlook that we have, let's see what it looks like, what the market has done over the last 2 weeks, and then I will tell you what I think will happen in the coming 1 week. Okay, so on August 30th, this was a very rosy picture we see up here. We were on 11,654 August 31st. It went to 11,784 and then it went crash. Okay, they broke the trend line. This was that huge fall on August 31st. Then there was another fall for the when the Nasdaq broke down. So it was a huge gap down here. So this was the day when I was traveling. So it was the Monday and this was the Friday when I was traveling. Uh, really bad stuff. Okay, but we did find support at 11,200 or so, and now the Nifty is back at 11,454, also 464. But this is also because Reliance really moved well, right? Reliance went from 2080, 2070, 2320, huge move. And if you look at the MACD, you see that the trend has reversed. So the Nifty looks okay. But look at the Bank Nifty. The Bank Nifty, this was August 30th. It was just sitting at 24,577. It went to 25,200. I had predicted 25,200. It went there, 25,200. It reached 25,200, but then all the way down and it's broken channels. It's now at 22,470, 470-ish. It's trying to make up into a trend line, but it's found support at 22,000. But the Bank Nifty still, I think, so what I think from the Bank Nifty so far is that it looks like it can progress back. Okay, because right now you're seeing the day chart. If you look at the 4-hour chart for Bank Nifty, which I don't have on this presentation, you will see that basically either the morning or the afternoon it's a green candle and then the red candle, or a red candle or a green candle. So every day it's been either it goes up and then it goes down. So or it goes down and it goes back up. So it's been very neutral. It's trying to find some space, and eventually I think it can break up. So let me give you my take on what's going to happen probably this week. Okay. First of all, the US market fell last week really badly, 10%, but it's kind of finding its feet as well. It's come back a bit, and even last night it closed in the positive, not a very strong positive, but kind of okay. Okay, and so the Bank Nifty is where probably we'll have to find some strength. And right now, from 22,500, I think if it finds strength, we are looking at somewhere in the mark of 23,500, somewhere here. This probably where it can go to, because if it makes up 1,000 points, okay, if the Bank Nifty can make up 1,000 points, the Nifty will go up to another 1,000 points for the Bank Nifty is about 350 points for the Nifty. It can test 11,800 again. Okay, so that's a possibility, but it depends on the Bank Nifty. Of course, the Bank Nifty, the struggle is that the moratorium loan case is still ongoing, and the hearing is on 28th, which is after the expiry. So that's one struggle. But again, a lot of the banks have been beaten down, are at good prices, and so the possibility of people coming in and buying right now is quite good. Okay, and so overall, I think this is a neutral to slightly positive picture for the Bank Nifty. The Nifty is doing okay. Reliance, and you can see a lot of the FMCG, auto, IT has been doing really well. Some pharma stocks have also started to recover. So the non-banking sectors are doing quite okay, which is why you can see that the Nifty itself is actually been not that bad. Okay, even though it went down, it's kind of been okay because you can see there have been plenty of days when both the morning and the afternoon session have been positive. But in the bank nifty, that's not the case. If you look at the 4-hour chart, you will see that most of the, and you can see that this is the day chart. You can see how they're all having wicks on both up and on the bottom and the top. And that's simply because either the morning or the afternoon is weak, and then the other session will be strong. You'll have a green, it's like this. If you see these two candles, okay, it'll be a red candle in the morning, a green candle in the afternoon, or a green candle in the morning and a red candle in the afternoon. There's never been any day so far in the last 1 week where the Bank Nifty has actually shown two consecutive strong sessions. So that's where the Nifty Bank is a little weak. But let's look at what the FIs are doing. Okay, by the way, the the domestic institutional investors still they sold in August. They're still selling in. They're still selling in September. But you'll notice the days when the Nifty or the when the index market crashed a bit, they have given support. They have bought on the days when the market or they gave a bit of support. The FIIs on the days when the Nasdaq was crashing, when the U.S. market was going down, they sold out quite a bit. But again, you can see the last 2 days they've been buying. So again, there's a bit of strength that you can see in what the institutional investors are also doing. So these are actually good cues for us. Okay, now I want you to know that whatever happened so far these last 2 weeks is not a reversal. We're not going from 11,800 all the way down to 11,000, 10,000, 9,000. That is not the journey we're doing. It is a profit booking. So you got to understand that this is basically people profit booking massively. That's the same thing that's happened in the US market. It's not because there was some bad news, some new pandemic came or some government struggles or there's no India China tension there. Okay, they might have their own tensions with China, but again the market was just correcting or profit booking. It was not a reversal, and that's the same thing for us. These last 2 weeks are not reversals. It's more people exiting out at higher levels and booking profits. And now because the market had come down a bit, people who are caught up in positions where they're not comfortable, they're trying to exit it. So every time you see the market go up a bit, you will see people selling off. That especially true in the Bank Nifty. Okay, every time you go up a little bit, people start selling off. Which is why in the morning, if you see a green candle in the 4-hour chart, the next 4 hours people are selling off to book profits as exit. But it's not because it's a reversal. It's just I think a lot of profit booking. For me, I personally still feel the market is on an uptrend. Just a bit of a profit booking slash weakness trend right now because people have seen the U.S. markets down a bit. But again, U.S. market is still going up now. There is no negative news. Nothing unless there's actual war between China and India or some clash happens and people soldiers die or something like that. There shouldn't be too much of an issue. Okay. So that's what I had in my prepared remarks. But if you guys have any questions, I'll open the floor for questions. Another question that people had was about the mutual fund rule, right? So let me explain that a bit, okay, before you ask me any other questions. One is that the SEBI has said that any mutual fund that is a multi-cap mutual fund, they should have 75% of their total funds in equities, which means they shouldn't be hedging like I do. So 75% in equity, and out of equity, they need to make sure. So it can't be commodities or the currency market. They have to be in equities, and out of that, the large cap, the mid cap, and the small cap all should have at least minimum 25%. So what that means, right now, the allocation is mostly towards large caps. Okay, large caps would be what? The Nifty 50 plus a lot of the larger, stocks, a lot of those. But You can see that most of these multi-cap mutual funds probably have a larger percentage in large cap stocks, and so they will gradually start moving. But the thing is, one, uh, it's not actually it's there till January 20. They have time till January 2021. They do have time to do this. Second, I don't think all of them are in a good position to exit all the stocks that they're holding right now, because they probably have also seen a lot of loss in the last 2 weeks. For them to exit out like that, especially if they've hedged it and all of that, in the FNO market, they're probably going to wait till the expiry gets over. Okay, so I don't think that move is going to radically happen. Of course, some of them would start wanting to move and if they have cash reserves, they probably would unwind, get into the mid caps and the small caps before everybody else got in, so that they can try to make some money. And so, for retail investors like us, that's also a good opportunity. If you can find, large mid caps or small caps that are looking good, that look to start breaking trend lines. If you see extra volumes coming up in any of those, that's a good sign. Okay, look for fundamentally strong companies. Don't go into penny stocks. Mutual funds don't do that much, by the way. So I don't see a massive correction now. Just to let you know, the SGX Nifty had gone down a bit after this news came out, and it's down about, I think, 50, 60 points. So there is definitely going to be a bit of correction maybe in the large caps, but how much, we got to see. I don't think it's going to be a huge amount, because if they all start exiting right now, they would be in a bad position. They'd probably be making losses, and they know that they have time till January 2021. Of course, they also know that they're racing against each other to put the money into mid caps and small caps, which can make benefit. But again, there are a lot of those stocks. They can, the volume will start coming into those, and also they are not the multi cap mutual funds are not the only guys in the market. Okay, so I don't really think it's a huge issue, but we got to watch out for certain stocks that could possibly get hit on the large cap side again. But I don't. Again, a lot of rules by SEBI. I don't think all these rules are really helping. The margin rules didn't really help a lot of people. I definitely had struggles on the first day of September. A lot of people who trade on the futures and option side had struggles. Margin was missing, margin was looking bad, pledges were not working, so many struggles. And so not all of these new rules that SEBI are doing are really beneficial, but again, they are the ones who set the rules. We are the ones who have to play by the rules. And so I basically don't think that you need to panic about getting out of large caps and getting into mid caps and small caps, but look for small caps and mid caps that are seeing good volumes and are fundamentally strong, and technically they're looking for a breakout, and I would probably enter one. Okay. Are we looking at a market correction as the reports that the market is inflated? But we already been in a market correction. Last 2 weeks is what we call a market correction. But I think we definitely are still going. The overall trend is still bullish. It's just that we have seen 2 weeks of correction and probably on the uptrend now. And is the market inflated? Well, the market is at 11,450. It was used to be at almost 12,500. So that was before the pandemic. So we still have 1,000 points to go in that sort of sense. Then the US markets have gone above pre-pandemic levels. So can we go above pre-pandemic levels? Absolutely, we can. Uh, is it going to happen immediately? So I don't think the market is inflated, but a lot of people think it's good to book profits now, and that's good. It's a healthy market. Happy Minds has been oversubscribed. Will this lead to increase in stock price or bring it down? Well, I think that company as a whole is looking like a nice company. Okay. I've also uh, subscribed to the IPO simply because I like the management. The management includes the people from Mindtree who started Mindtree, and now he started He's one of the co-founders of Happy Mind, and also the space they're completely in the digital market. So for them, none of this, pandemic is not a issue. Of course, they're a small company, but because the management, I like it, and so I've also subscribed. They've been, I think, 4 7 times oversubscribed already. So it's a luck of the draw if you'll actually get the shares. If you get it, I will see if I'll hold it or probably. So will it lead to a price increase? Usually, when it's oversubscribed, usually if the market is doing okay, the IPO will start at a higher price. Meaning, we if you have subscribed to it at 165 to 166, it might be at 200 or something that it opens. I don't know. Uh, but see, some people buy IPOs because in the primary market because they want to make a profit on the secondary market by selling it immediately the day it releases. Okay, so if they buy it for 150, they want to sell it off at 180, 200, and then they okay. Uh, but I personally don't think that's why I'm entering this share. I think it's got a good story. So I'm not looking at making that quick buck. I'm looking at making larger amount over a longer period of time. So I'm not really bothered about whether the price opens at 200 or 150 or 160 or whatever. Okay. I'm planning to hold it for a while. It looks like a good share. Yeah, and it's in the IT industry. So it's a good industry. It's in a good space within the industry, totally digital and good management.